Adani Group announced acquisition of wholesome stake in Ambuja and ACC for a total of $10.5 billion, implying an EV per ton of $164 for CY 2022 estimated value. Adani will acquire Ambuja at a price of 385 rupees per share and ACC at 2,300 per share, which is 7 to 9% higher versus the current market price. Now, the deal is targeted to be concluded in the second half of 2022, subject to necessary approvals. Now, analysts at Jefferies have come out with a note, and they believe while Adani's strategy would be keenly watched, premium valuations could mean higher targeted unit profitability, likely banking on maintaining brand premium, saving from royalty reduction and synergies from other group adjacencies. We get you the key highlights of this report and the points flagged off by Jefferies analysts. Number 1. Combined current cement capacity of Ambuja and ACC is about 67.5 MT, with both the companies having expansion plans to increase their cement capacity to 80 MT in the next 2 to 3 years and 100 MT in the medium term. Now, Adani Group will get pan-India presence through this acquisition and 2 strong brands. It will be exciting to watch how the brand positioning shapes up in the short to medium term. Point number 2. Adani Group's entry to cement business reflects its belief in India's growth story and cement industry's growth potential. The group believes that it will be able to build a uniquely integrated and differentiated business model with several adjacencies of existing business, whether it's port, logistics, renewable and real estate, and expects significant expansion of capacity. ACC-Ambuja merger would likely be explored as well, which they believe. In the past 2 to 3 years, with scale-up of savings via master supply agreement, cost-saving projects to bridge gap with competitors and a push for efficiency projects like WHRS, Ambuja and ACC have outperformed peers. Reduction in technical no fees to the tune of 1% of revenues, which is around 50 rupees per ton of EBITDA, is likely to be another low-hanging cost savings for the Adanis. Another point flagged off by Jefferies is that Ambuja and ACC both are very strong brands, and the company has very high trade sales component of nearly 80%. Now, in all markets, these brands feature in the top 3 positions. Retaining of brand position is going to be key for sustained profitability given the increasing trend of non-trade sales for the industry. So what is Jefferies' verdict? Given the premium valuation Adani Group is paying for this acquisition, the required EBITDA per ton is 2,000 rupees to achieve double-digit ROE, assuming 1:1 debt to equity at 7% interest rate and 80% capacity utilization. Now, as a result, fight for market share by reducing cement prices is likely as per Jefferies by the acquirer, given that the average EBITDA per ton is 1,000 rupees for both the industry and Ambuja plus ACC. They retain a moderately positive view on the sector.